All right, let's jump right in. What we're doing today is establishing a structural record. Our focus for this explainer is strictly the WTI crude oil Phase 1 cycle. Now you've got to remember, every single cycle in this system operates on strictly predefined geometric parameters. I want to be absolutely clear right off the bat. This is not a forecast. We aren't predicting anything here. We are simply creating a structural record of the market DNA framework exactly as it stands.
So our asset of focus is WTI crude oil. Its specific cycle identifier is oil_3_1. Right now, we're currently in phase 1 initialization, and the price is precisely at M.
Okay, let's look at the phase initialization data, which is completely locked in. Our primary entry, M, sits right at $96.325. We also have a secondary entry, PC, recorded at $89.653, giving us a mean entry of 92.989. The core geometric parameters are rigidly set too. The trapezoid time is exactly 46 days, the third triangle domain is 17%, and our risk coefficient is precisely 2.
Before a single dollar of capital is ever deployed, the risk architecture has to be strictly defined. In this model, we're utilizing a hypothetical capital base of $100,000. The maximum expected drawdown is hard-capped at 5%, which is $5,000. We're looking at a contract size of 1,000 barrels, and the expected low price for this setup is recorded at $61.37.
Now this next part is absolutely crucial to the entire framework. Both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size.
So what does this all mean when you run the numbers? Well, the explicit output of this deterministic calculation gives us exactly one result. We get a highly precise trade size of 0.08.
Next up, we map out the sequential interactions for our expected structural progression. It maps out like this. Target 1 is the mirror or lower trapezoid sitting at $97.08. Then target 2 is apex N at $104.08. Finally, target 3 is the trapezoid top-up at $111.73.
Keep in mind, these expected returns are calculated purely as structural targets. To put that into perspective, let's contrast two basic scenarios. Scenario 1 assumes an exit right at target 3 completion, which yields an expected return of 1.5%. But in Scenario 2, if we record two entries reaching target 2 and target 3, the expected return is 2.65%.
Looking at the visual data, it strictly records the Phase 1 entry timestamp at exactly 1300 EST on May 21st, 2026. Now, Phase 2 mirror contact is not shown, Phase 3 end event is not shown, and Phase 4 completion is not shown. We are solely documenting what is currently visible. Just for a bit of context, all of this data constitutes the public model documentation. It's officially provided by Market DNA, and you can find further specifications directly at marketdnaedge.com if you want to verify the record. Finally, we have to formally record the operational constraints. First off, this is absolutely not financial advice. Also, using leverage above 10 is strictly prohibited, and you must not invest essential personal funds. Again, this is purely a structural record. So I leave you with this thought. When every single parameter is geometrically locked in place before entry, what space is truly left for human error?